Good morning, guys. It is Thursday, March 14th, 2024. This is Bathrobe Business. I'm George Yoganov. I got the coffee and I got the news. So, first story I'm going to cover is going to be kind of the major headline again, but I don't think it's any new news. More inflation data comes out that it's hotter than expected. So wholesale inflation this time. So the PPI, the Producer Price Index, which measures the cost of raw materials, intermediates, and final finished goods, jumped 0.6% for the month of February. They were expecting 0.3%. So we are double what inflation was supposed to be just for 1 month alone. This is coming again in addition to the CPI data that we had yesterday. So every indicator is coming out, I would say, is showing that inflation is ramping up. As I talked about yesterday, I don't think that this is a single occurrence. I think this is going to continue into the summer months. And I think if this keeps pushing, I believe we're more likely to see a rise in interest rates rather than a cut from the Fed. So I'm still saying that that's very likely more of a possibility than any cut. I think cuts are completely out of the question. We're getting month after month of increased CPI, PPI, PCE last month was on target, but still higher than it should be. So there's still no indicator showing that interest rates are affecting inflation. Inflation is still persisting and continuing. And given how strong the economy is doing, I think it's going to continue even more because hot economies cause inflation as well. So next story is going to be about retail. So Dollar General is actually posting better than expected quarterly net profits of $9.86 billion. Compared to the average of $9.78 billion. Partly, this is because a lot of people are trying to escape inflation by going to dollar stores. This is one indicator to watch. So, usually in bad economies, these dollar stores do very well, and in good economies, they don't. It's obvious that people that need money will start to save wherever they can and shop at dollar stores. However, why this is a little different than usual. Even though the economy is hot, the level of inequality, I think, has never been higher. So I think we're seeing real striation between upper middle class, lower middle class, and truly lower class, unfortunately. I think the disparity between the classes is starting to grow. So even though you're seeing a very strong economy, we're seeing growth in assets, we're seeing growth in the Dow Jones. The Dow Jones right now is almost at 40,000. The S&P is at above 5,000. NASDAQ is above 18,000. We're seeing very strong economies. Anywhere you go, every retailer is having very strong sales. But I think that a lot of people that are outside of the certain class that is able to make money from these assets is really struggling. So that is something to consider. I still think the economy is strong overall, but I think there's a lot of pressure on a lot of inequality in the market. Dick's Sporting Goods, also very powerful retail sales. They came in hotter than expected revenues of 3.88 and 3.8 billion versus the expected 3.8 billion. Just another show of how strong the retail sector is right now, despite online pressure, despite slowing holiday sales, etc. Everything's going pretty hot. That's it. That's pretty much the only stories I have today. It's going to be a really, really short video. I'm going to get to work. I hope. Oh, no. I have one more story. And this one's interesting. I can't believe I almost forgot about this one. So, former Treasury Secretary Steve Mnuchin is putting together an investor group to purchase TikTok. Interesting. So, ByteDance is being forced to divest from their stake in TikTok as American companies are once again trying to buy it. It's kind of funny that this started during the Trump administration. And of course, Steve Mnuchin was the Treasury Secretary under the Trump administration. He is now positioning himself to be the beneficiary of this. If this isn't corruption, I don't know what is. The fact that TikTok is being targeted at all is just complete BS. There is no reason that TikTok should be targeted specifically since I can fully believe that the CCP is using TikTok to spy on us. I can take that at face value, sure. Are we going to care about the fact that Facebook, Twitter, Instagram, which I guess is the same thing as Facebook, Google, YouTube, all of these companies are constantly spying on us? The CCP is 3,000 miles away. They can't really do much to us. Versus here in the United States, they can do whatever the hell they want. So the fact that we're targeting TikTok and this maneuver would just further surveillance on U.S. individuals is kind of absurd. I don't know if this is going to go through. I think this is kind of a crazy measure. We'll see what happens in the coming weeks. I actually hope it doesn't go through. Not that I'm a huge supporter of the CCP, but better to have some diversity in your authoritarian states than having everything one autocratic regime, I guess. So I'm hoping it doesn't go through. And that's that. So those are my stories for the day. I hope you guys have a productive morning. I'll see you tomorrow.